Baby, just when you thought it couldn't get any worse here, folks. Oh my God, WhatsApp and Instagram are down today. Facebook getting devastated because of that. You got Evergrande Group out of China halting the shares traded in the broader markets. Oh my God, after we saw pre-market trading yesterday with the S&P up 1.5%, the Dow up almost 2%, and the NASDAQ up 0.5%. Clearly, pre-market doesn't mean crap here, folks. So consider hitting that like button. Let's enjoy the pain together by, first of all, taking a look, obviously, at the broader market before we dive into this more particular news, because literally I made a live stream yesterday talking about how crazy it was that the pre-market was up so much and my bold stock market predictions. And just taking a look here, VOO today down 1.5% instead of being up 1.5%. Apple almost down 3%. Microsoft, Facebook down almost 5.2%. And the only thing in the bloody green is my most overvalued stock, Tesla. It hit over 800 today, and somehow it is still in the green by only by points of percents. And anything in the green today is only up by points of percent. There is no trending company that is up that much at this current pace and time here, folks. And anything that is trending is something you've never heard of before. And just taking a look at Bitcoin today, guys, it is trading up on this news, surprisingly. And gold isn't really following suit in any major way. You really think in these volatile moments, gold would be shooting up back above like $1,800 an ounce, but it ain't, which is kind of surprising. Now, this is kind of like segue news, but I find it fascinating that we finally got FINRA releasing the August report where it looks like we're on track to be over $1 trillion in margin debt. I don't know if this is a good thing or bad thing or how it directly correlates, but I always feel like when the markets get really shittered, a lot of it has to do with people probably paying off margin or cushioning margin blows, which leads to a little bit more of a further sell-off in the market. But a one-to-one correlation is probably way too hard to kind of pin down at this scale, but just take a look at Facebook. Now is the cheapest S&P top 10 stock, trading below 24 PE, which to me is an insane buying opportunity, down 5.7% at this moment here, folks. In the last month, down 15.4%. Facebook hasn't seen a dip this hard, literally year to date. This is the first major dip, and obviously it's just because Instagram and WhatsApp are down. So I'm so sorry to anybody in our groups. I haven't been able to talk to a single person, and thank God I got through my work this morning because I talked to everybody globally on WhatsApp. So this is absolutely staggering. Actually, while I'm sitting here, by the time this is live, I really hope it comes back. This could be like a short-term dip buying opportunity because obviously if WhatsApp, Instagram, any of this stuff comes back online anytime soon, people will probably pick up the dip. But as I sit here, and you can't see my phone because it's getting bleeped out, but you can see that the little thing is spinning right there, just showing no signs of hope right now for WhatsApp, which is pretty staggering considering most people internationally use it as a phone service. So I'm curious if it is down internationally. And speaking of international news, we got China Evergrande Group absolutely halted right now. And this is cool. And the reason I think this is cool is because I'll get into the actual news and what I think is going on in a sec, but the stock itself from the bottoms it hit a week ago is now trading up 30%. And I think it's so funny because there's a lot of day traders out there and people swing trading this, I would imagine, that bought into this and have been dying to sell it at this point, being up 30% and can't because the entire thing is halted. But this is actually good news because it sounds like China isn't going to be bailing them out. It says shares in Chinese property firm Evergrande, the Ariana Grande of foreign investment crashes, suspended pending or obviously suspended their trades pending major transactions, which means it sounds like they might be getting bailed out by a buyout from another conglomerate, which is probably pretty good news overall and is probably what will continue to send that stock higher depending on how this transaction resolves itself. But there is no trading right now on the one day for Evergrande. Now at this point, guys, because this market is absolutely horrifying to people, and if you're holding small caps, you're getting devastated. And I mean, I keep saying this, guys, just remember, it doesn't matter how much stocks drop, they can always drop lower. I mean, that's why we're seeing BABA in the 130s today. I mean, the destruction in small caps is getting absolutely painful for anybody that's highly leveraged in that direction. But there's been a lot of cool bull case thesis coming out lately, guys, from a lot of the big investors like Kathy Wood, who kind of talks about some of the current macroeconomics. So I want to take a quick listen from an interview she had last week, and I'll see you in a second.
Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings and so got it. by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today. And in order to service their debt, they are going to have to cut prices and move those goods and services that are on their way out anyway. So I am concerned about that. And I think there's going to be a lot of confusion around it as well. There will be a lot of job displacement. There will be, no question about it. In fact, when we started our company in 2014, Oxford University had just put out a piece which said, and it was about the United States, that said 47% of all jobs in the United States would be lost to automation and artificial intelligence by 2035. And they left it there. Hair on fire, headlines screaming, a lot of fear about automation. We got the question every meeting. And what they had neglected to do, which we did, was finish the story. So with automation and artificial intelligence, productivity is going to go up dramatically. We think more than it ever has, certainly in modern times. And with productivity increases comes more wealth creation and more GDP creation. And according to our estimates, in the year 2035, because of automation and artificial intelligence, we believe that GDP here in the United States will not be 28 trillion, which would be, if you drew the growth, linear growth, that's where it would be, but instead will be $40 trillion. And it is our job, focused only on innovation, to figure out where that extra $12 trillion is going to come from, and then to educate and orient our investors, of course, but also parents and grandparents. You know, how should you educate your children? You know, how should you steer them so that they are on the right side of change?
So in this market, obviously, because there's so much going on, guys, you can never predict whether the markets are coming or going. And many of us have been devastated buying in over the last week. I wish I waited a little longer, but that's always, you know, looking backwards in time, that retrospective look that devastates you because you're like, damn it, if I only waited another week, my God, I could have bought my Google shares today for the low 2,600 range. However, what I'm thinking about doing is paying attention to when WhatsApp and Instagram comes on. And if I see a correlation in that stock price, I may do a short-term swing trade on Facebook. I feel like I'm pretty leveraged into this point, but these buying opportunities are rarities. And I honestly think that, you know, if Instagram is down for a week, the stock's going to get slaughtered. But if it's only down for a day or two, this news will blow over like it has in the past, and the stock will likely rebound. I wouldn't be surprised by 5, 10, or 15%. Easy opportunity to take advantage of that. You can mark my words for it, though I am not a financial advisor, so do not take this as financial advice here, folks. But at this point, I pass the question off to you. How are you guys holding up? Thank God this market is downtrending for anybody looking to buy these dips that have been waiting for paychecks. This is your opportunity. So don't sit on your hands here, folks, because we never know how low it goes and we never know how high it can go right after. So stay cool, stay awesome, and damn it, I look forward to catching you in the next one.